Happy New Year. Welcome everybody. Day Trader Rockstar here for the high probability watch list and day trading radio. This is the first watch list of the year, and traditionally this is our New Year's watch list going into 2024. And I usually put this one out to the general public, kind of a broad overview of the past markets, the upcoming markets, where we see things are going, and some great stocks that I'm picking for 2024. Plus a review of some of the stocks we're in and anything else that comes about here. But just want to wish everyone, especially the members here at Day Trading Radio, a very special Happy New Year. I mean, the New Year is still a couple days away on Monday. We're going into 2024. We're just coming out of a 2023, which has been a pretty great market to be in. Just the opposite of 2022. You know, it's just we've come full circle. And we're approaching the all-time highs again, and it looks like we're going to get there very, very fast. Beginning of the year, we're going to go over some of that stuff in a second. I want to do a couple things on this video. I'm actually going to dig out last year's New Year's Eve video and kind of just go over some of the setups we looked at and just kind of compare them where they are today. Give you the setups that I like for 2024. And give us, of course, the setups going into next week and anything else new that's coming up. Of course, there's multiple ways we make money here at Day Trading Radio. And if you're not familiar with Day Trading Radio, we do a live. I do a live. Our community does a show each and every day. We've been on the air since 2007. And, boy, we have a long run here. So... Every morning we get on the air, 8 to 9 o'clock, and we trade the whole day. We trade stocks, options, futures. We have great community traders in our chat rooms, option chat rooms, the stocks, the futures. We do scalping during the day, research, questions, having a good time, a lot of education. A lot of beginner traders start off here at Day Trading Radio to get the good foundation, the high probability methodology foundation, which I teach is based off the lane divergence method. If you're not familiar with that, I definitely just to tell you to head over to DayTradingRadio.com, and there's a lot of information there, and check it out. All right. Happy New Year. Let's kick this thing off. Again, this is actually looking back here at 2023. This is one of the first stocks that we were going over. And I actually will play you a piece of the clip here, and I'll kind of go back and forth, and we're going to just, because there's a lot to learn here, Now this watch list that we put out goes out every week to the members. Now again, the New Year's Eve, the New Year's watch list is kind of opened up to the public, but this type of watch list that you're seeing right now gets released every weekend going forward to the members of Day Trading Radio. And we outline 10 stocks that are looking good for swing trades. Now, our scalps and all the other things we do daily, we're always scalping the market and trading intraday trades and futures and stuff. But this watch list, the high probability watch list, the 10 for 1,000 watch list, that's what we used to call it, is based on quality names that are meant to be held for at least, I would say on average, at least 2 weeks up to multiple months. It's really a longer term swing. But of course, if you get a big move, you always want to lock in profits, and we kind of keep you up to date on that. A lot of the setups that I use, and because we're in this business to make money, not to just to have, to be in a stock and watch it go sideways. So we want to actually, my job is to actually point out a stock that's going to make a big move, when I'm bringing it to you, and then it's going to make that move, and then it's going to probably consolidate or pull back. But we want to be in it right before the big move and take it off after the big move, so we're not wasting any time in that stock. And that's how the methodology works. So I'll identify divergences for you. You'll get in. We'll usually trade them, and then we'll get out and we'll find another divergence, get in. And again, most of those stocks are held for a few weeks, couple weeks to a few months. Really depends on the type of market, and and how much of a gain we gain on the stock and the percentages and stuff like that. But the other key thing on this watch list is that they tend to be very good names and quality names, and I have a strict criteria that has to be met for the stocks to get on this watch list, which is very important. You have to have, and again, if these are buy-side candidates, and I do put some sell-side or short-side candidates on the list, but if they're buy-side candidates, one of the things I want to have is one of them high probability playbook trade, the top 3 playbook trades that I look for: the divergence, a double bottom divergence, or a regular lane divergence, a pure divergence, what we call a quad rotation. There's a couple other setups that you might not be familiar with that I talk about: stochastic rotation, channel line bounce, coil stochastics, 200 EMA breakdown, channel line bounce. These are kind of the setups, and when I do show them to you, I kind of go over those and teach you about the setup and what makes the setup. And there's a whole library on Day Trading Radio for members that identify each of these setups. It's called my playbook, and there's about 10 different setups that we look for in the market. The top 3 I really recommend newer traders just sticking to the top 3. No wasted trades, patience and discipline. All right, so let's start off. This is actually from last year, so I'm just going to kind of point it out. I'm going to push the button and see what we can hear here. Stocks, typically you'll find little yellow circles here, and these are in review. Now I'm going over the see stocks that we looked at previously. Just listen to this for a second. Why do we look at them? Probably because there's some annotation on the chart that we could look back and see that was clearly a divergence that we trade. Now, what I'm discussing here, if you watch the stocks on our charts daily, intraday on the watch list, and you'll see these orange, yellow circles. What we like to do is point out, because we've been in this market for over 16, 17 years, a lot of my charts will go back in history and we'll see lines on it and stuff, and we'll identify them. Could we come back to the same stocks? If you see a yellow circle on it, it's because we identified it at that point as something we like. We never go back and put a yellow circle in and say, I like it here, and look at the big move. So I kind of stress that point a lot, because we want to always recognize that that's a lot of that's a lot of knowledge and a lot of education that we can be gained by marking our charts off. And then if we end up going back and looking at it and see if something worked and why it didn't work, and it still is a lot of things. So that's what I was discussing here. This is a classic divergence where you got that low and that higher low and that nice move up, and that's the first pullback. And just remember, anytime you see a yellow circle on the chart, these are put in at real time. So we could always look back and say, oh yeah, we like this stock here at this point. We liked it here. That's exactly what I just recently said. On JP Morgan, we like this double bottom. You see that candle came down, kind of tested that previous low, but a much higher stochastic rotation here, and also a nice little flag here. So there was some some financials I do like, and I did. So again, this is our first one we liked to last beginning of 2023, and you can see there was a divergence call here. So what I wanted to do actually is just let's just take a look at the where we left off. So this was right when we had this. That yellow circle is still there, and that was the divergence. And as you can see, how it moved all the way up, and actually, I think we can zoom out here a bit. You can see the pretty nice move overall there. I mean, again, all of January going into February, and again, these trades will probably get a gap up and we'll probably end up selling when we get overbought and we wait for our next setup. If I go back in this chart and probably look to see, we did like it back here on the pullback. It got a little bounce and continued to chop around. But I just want to point out that a lot of these stocks, and let's go back to that video and see what else we pulled out here. Bank of America, which is another one. So I took a couple weeks ago, basically off the same type of divergence. All right, there was a divergence back here, but a lot of these had that low. I'm not going to waste your time on some of that, but I just want to fast forward and actually take a look. So now 3M is kind of interesting down here. Continue to trend lower and actually take out the lows on the S&P. That has a lot to do with the position trades we want and how many trades we want to take. Now, we went over this chart in the previous video, and we're looking at some levels down here. I said, now this was this is the beginning of the year. Here. This was a target that we had up here, which we got very close to. I remember now there's a little target down here. If we could get down here and put in a divergence, that's something I would like. Now, there is a recent divergence here. There's a slight little higher low. This candle came down. The closing price on that candle versus the low price on this candle is important. I like closing prices more than extension or lows. This one didn't have this closing price was up here. This closing price is down here. So this closing price is up here. So all right. So I just found that right in here, and this was that candle we were talking about, and you could see it chopped around for a bit before starting to move back up. But the key was there was that slight divergence that we were just talking about, and I just want, like I said, I just want to go back with you and see how some of these are, so you get a feel of what we're looking for, and then we're going to go into our bigger watch list here. All right, it's funny because I was looking at Disney back here in the beginning of the last year, and it was down here in that 86 area. Now, listen to what I said here. This is, again, last year's, right before right a little bit lower. You need to get down into that, probably that 79 area, which so I circled that there. I think is a great buy zone on Disney if it gets down into the 70s. It's 86 now. So it's very, very close to being at that level. Now, we could take a different approaches here. We could start a scale-in process to make sure we're not missing the boat if this market does turn around and this is the bottom here. Or we start a scale-in, a very small scale-in, 10% position size, maybe even a little bit more, maybe 20% position size. And if it goes down a little, then you add another 10%. And you kind of bring that cost average down into that real important zone. And that's good for quality names. A lot of people don't like the cost average in, but if you have a good area and that you're chopping around, it's a good technique. It'll work out for you. It will. So all right, so let's take a look at Disney. That was right at the end of the year. I circled it. I'm curious. February. Here it is. There's the circle right here. So again, right after that circle, we ran here. First of the year, first month. Now, I don't, seasonality, and everyone's thinking, what are we going to do this year, January effect and stuff? Well, we're going to see if maybe Disney gets that same type of run. But as you can see, that had a huge run, and we kind of marked off some levels here that was interesting. There weren't really circles there, but let's just we talked about 79 and as being an area that I really did like. And we got back down here. We circled again. We traded this one a lot. Nice little run. And then we started basing out here. And I remember this. This was the end of the year. And we were chopping around. Look where we came down to 79 area here. Right under 80. So that's where we probably took our biggest position right there. And sure enough, we kind of ran up here. It gapped up. This is where I actually took it off on the 200 period moving average. And now it's moved up a little bit higher, and now we have come full circle. We're at $90 now. $90. Not too far away from that $86 it was last right here. I mean, this thing definitely hasn't really given us a lot of upside. People who are holding this all year are probably just like really frustrated. You got to be super frustrated on something like this if you have a lot of Disney stock and it's just kind of drifting here all year. You want to be in things that are going good. So I just circled it here last week. I like the Disney. I just did a scan. It is on our watch list going into next year. First stock here, Disney. And why we got that? We got an underlying trend line. Well, potential trend line if we get that bounce. But the real big thing is we're oversold here. And we're coming over that base. So this is our first base breakout. And the first really pullback, actually the first pullback was probably right about here. We kind of chopped around, but this is the first oversold level. And we'll see, we do have 85 area. I don't have a position yet on this, but I'm marking it off for this upcoming week. I am starting to like Disney again, so Disney's going to be on our list for this week. And again, just like as I mentioned in the last year at this time, this is a great stock to use a scaling process. I would get in here. If it came down to 85, I'd probably add to it and kind of trade in that 85 area. If it did get down here, this would be a real good support level and probably a great bounce zone right there. But it might not do. We are already oversold. So this could easily start moving back up. Again, remember what happened last January. This thing really ran. Look at that thing. I don't know if there was a January effect on Disney, but I could see this happening again and getting right back up to that 108 area. So high on the list, Disney, first stock on the HPS 2024 watch list. All right, here we have Carrier Global, building materials. They do, I believe, large air conditioning units and ventilation and stuff like that. We looked at it here in January. I'm just looking at it. Push back up and it comes back. And I was kind of discussing this. I saw that beautiful divergence in July on here. Those are really good for the momentum shifting. I see that multiple times, especially right here. Even though you didn't take out the lows, relatively speaking, the price came down to that recent low area. But look how high the stochastics crossed back up here. And that was, look at the big move here. So whenever you have a nice cross back up, the price is very close to the previous low, but you have an aggressive move I call the Nike check mark instead of a kind of a rounded move. And this one gives us that a lot. So whenever we have that nice move, we tend to get follow through. So Carrier Global, big divergence back here, pretty decent divergence right here. Looks like I'm looking at a divergence here right now. Pointed out to you right here. So what I'm not, again, I don't want to extend this video for 5 hours, so I want to kind of get through it. But yeah, I'm looking at this right here. I could see that there was a slight divergence right here, and then the 43, and a nice ramp up. And again, directional momentum is important. Market's moving down, but all of a sudden the momentum is now shifted back up, and that's where you want it. You want to be in that when that momentum shifts and be in the right direction. So here's that stock. That was right here, and that was a little lip right there. And that was a divergence area there. So you could see there was a little move on that. Now, it didn't take off here. It did move up. Let's take a look at this a little closer. You can see Racer. Great member of our room, posts a lot of stocks. If someone brings me a stock and I like it, I'll usually put their name on it. And it's had a nice little pullback here, and each time we got down to that trend line, we liked it. As you can see, oversold, and finally the big move came. I mean, look at that. Now, Carrier Global is actually right up against the highs here, and that's a great sign for a breakout coming. It doesn't qualify for an HPS setup because we're looking for a momentum to be on our side. Rotation, I just wanted to point. I'm just going reviewing some of the stocks that we went over last thing. So, but that's actually very strong. But I wouldn't say that it's guaranteed to pop this because we're overbought here. We're a little overextended. We could get a pullback. It's not the high probability zone that we want right now. Here's a ETF, a directional ETF on the bull, 3 times bullish TECL. And I've been following this one, even trading a little, and it's been working out okay. Now, I haven't looked at it back here, but right now I'm going to just look at it and circle it because we did have a slight divergence, a signal divergence, and it's kind of a retracement. We kind of popped through it, came back, tested that trend line once, twice. We kind of grinded on it. All right, so I'm going to cut in here and just kind of talk about that. The criteria here, when we talk about the high probability methodology, we work off of 5 different indicators. The 5 different indicators are All right. So our foundation indicator is stochastics, and from the stochastics, a lot of things that we get from that, the divergences, triple threats, or the quad rotations, coil stochastic, flag setups, everything are really built off the stochastics. But with the stochastics, we like to line up other indicators. Now, I use indicators, could be what I call any of these 5 here. So a confirmed trend line is very important for me. So I mean, stochastics line up with a confirmed trend line or a channel line. Moving averages. Is there a recognizable pattern? Patterns, wedge channels, 1, 2, 3 patterns, flags and pennants, support, resistance, and reversal candles. All right. Now each one of these things can be broken down into your own little things, and I break this down into a little bit more detail. Again, if you're a member, you get this. This is my business plan. This breaks down all the criteria of everything. How to identify these and what we're looking for, and have so much information on in some of these little mini courses that you get as a member. And we discuss a lot of this, but again, I just wanted to point out that along with the stochastics, we want to have some other indicators lining up all together, and you'll see those on some of these videos, or you'll see this on some of these charts. So what I'm talking about here is a retracement to a trend line. Now we have a big long trend line. Now probably if I zoom out, because this is a video, I can't really zoom out. I could do it on the other thing. We came up to it, we chopped around it, we got through, we came back, and whenever we get through a trend line and we react off of it to the downside a couple times, then eventually push through it and we come back to it, we look for it to hold. And if it holds, it's really deforming itself, and it popped again and came back, and we start to ride this trend line. That's very good, especially now when you have a divergence and you're riding that trend line. That gives us that almost feels like we have a pop in this, and this is not a bad one for if you like the tech, the old FANG stocks, and you think there's going to be a bounce in it. This could give you a really good return on it because it's 3 times the. I think it'll be 3 times the Q's about. Let's just double check that. All right, so talking about a bounce here. Remember, I circled that. That was right. That was January 1st. Going to watch list. Let's take a look at it. That was tech stocks too. That was a very. So here's the January. This is when we did it. And let's now zoom out here. Let's take a look at what happened with this. So I mean, that was basically your bottom. Your bottom was in. Now slow grind all the way up. Even in a market that wasn't really, well, it was moving up here. It was just, but it was slowly moving. But talk about nailing the bottom here. And not that divergence there. And that had low, and then we had a little lower here, and we had 2 divergences line up here, that little spike here. That will help us. But as you can see, you can look all the way back at this right now. And it continues, and it's right at the highs right now. So all year long, I mean, hopefully we give you these setups this year and you go long, and you just come back next year and you take your profits. That's for those out there who don't have time to trade every day with us. This watch list is going to be super valuable for you because, again, these are important. I only circle these when they're ready to go. All right, now you can see, let me go back here. We marked that off. That nice move up here, and then we had a nice run up, got up to our a level where we marked off our high, pulled back a little, had earnings here that dropped us down, and then we kind of rallied back up and put in a nice long base here. We're actually just getting out of that base, which is great. So I would actually continue to watch the net, but I couldn't justify putting it on the watch list at this point because of the overbought levels, and we'd rather get this oversold. But because of I'm looking at.
It sounds good, but it appears that it looks like.
I'm looking at Tesla back here at the beginning of the year. It was at 123, and I do believe they come out with their totals for the year and stuff like that. They might come out. Let's see. I do believe they did recently on.
The estimates are pretty close to what.
Let me see what it said. This is from the video last year.
What was expected here?
I'm just curious to see what I said about this.
But it might be a catalyst for tomorrow, as the news just got dropped right now over the weekend. Again, analysts are estimating 417,000 deliveries in the fourth quarter on average. 417,000.
That's 2023. So I don't even,
that's basically what we got for 417,957. So, I don't know. I started picking up some Tesla. I picked up 15 shares on the breakdown the other day at 120, 125. We're down $30 on the trade. Not much. But if we can get it back above this, maybe there's a little catalyst here. I'm a little concerned that it could take out the 100 level. I think tomorrow it should be.
All right, so I'm just going to go back here and take a look at that and not waste any more time on that. Let's take a look at the Tesla back here. TSLA. Wow. Well, that was the bottom too. January was the bottom. That was a big bottom on Tesla. That was the bottom on Tesla. 146, right underneath that. Where was it? About 114, 113, 114, I think. And we're worried maybe going under 100. And where did it go? It got down at about 97. So it did kind of get down right down to that 100 mark. It popped up all the way back up to almost a 200-point move in a couple months. Pulled back, chopped around, and this is where we are now. And we're not in bad shape. I mean, I'm not looking at Tesla putting it on the watch list. No, it doesn't make the watch list. But that's something that we were looking at, and what a run that made. So it's got $340. Take a look at the DPZ here. I do notice history of divergence. Most stocks have gotten taken down a lot from the 2020. And this one, yeah, it's been taken down. It's definitely off the highs. The pandemic lows back here at 227, 273, I should say. I don't trade this one. It does have a little divergence here.
I'm throwing that one at you because it is a divergence at 346.
All right, I'm going to have to look at this. Again, I'm looking at these for the first time with you. So DPZ here. And then I'm just curious to see. I don't remember what that did really. Here's the January. Ooh. That wasn't it. It was January 23. It's the next January. Right here was the divergence. There's a circle. Didn't do much. It got overbought, and then it kind of looks like there was earnings. It dropped down. Not much going on there. Did get oversold again. We liked it in June. And, well, that was great. That was the best. And it's right back up to all-time highs. It looks like. Was that all-time highs? I might have spoke too soon. No, it's not all-time highs. But it's up there. It's up for the yearly highs, right up against that level. Let's take a look at this last one. Amazon. I was curious. I circled this one going into the beginning of 2024.
Which most of these stocks, and again, you can see the nice little move.
I don't know if I mentioned this, but this is a coil.
Organized flow here under the 20.
I really don't know if I mentioned that as a coil.
We're due for a pop through the 20 to the 50. I like the Amazon down here. For whatever reason, I like it. I like the reversal. I like the divergence. I like there's a little coil here.
Yep. I like
that. We have retested, and there's a nice gap up here at 104. Any lower levels down here is one of my. This is one of the stocks that would be scaling in anywhere in the 70s. Anywhere in the 70s, I'd be scaling in on Amazon. It looks excellent down here.
All right,
so best bets going in.
Let's go, Johnny. Let's see what happened here.
And again, from last year's watch list, Amazon. And here it is, right here. We circled it off. And what did we say? 104, that gap area? We came right up to it. Actually got up to the 200, gapped above it and came back. But nice move up. Pulled back here. Put in a secondary divergence. It was oversold here, but then we had a secondary divergence, which is really the key area there. See that higher low? We marked it off here, you know. And then from that point on, it just kind of took off again. Got back up to a resistance area. But if we look back out, that was, again, called the bottom on that. And this is where we just left off. I remember watching this on the last pullback in October, and we had a picture-perfect falling wedge pattern, which is one of the patterns we love to trade if we do happen to come across a pattern like this in a good quality name. Now, two stocks, and they both start with A, had a perfect falling wedge pattern this year. Amazon and Apple. Let's see if we can see the Apple falling wedge. Here it is. See the Apple falling wedge and the breakout. Now Apple's kind of almost getting oversold here. So believe it or not, Apple is setting up as one of our stocks going into the new year as oversold on the daily, which is, hey, that's something, you know. I am starting to like Apple a lot. You know, I want to wait a day to circle it, but we'll put the circle here. Like if we could get down a little bit further, I would really like that Apple here. All right, so we went over all those stocks. There was a couple other ones here, but I want to just start jumping into the stocks we have for this year and this watch list right now. So let's get started. I'm just going to go down through them. You know what the criteria is now. We talked about Disney already. So Disney's oversold. We have circled it. Disney looks good off the trend line. Would be scaling in all the way from 90 to 85. This whole area looks great. I think right now you got to start getting into Disney here at 90. We already discussed that. GIS. So General Mills, oversold. Long base. Hasn't really moved off of this base. It hasn't really given us too much to like yet. There is something to be said about that. Sometimes it's going sideways and it's not participating with the market. It's showing what we call a negative price divergence, where the market is moving up aggressively and everything's at the highs, but General Mills is not moving up and not doing much. But I did circle it on this base here at 65. And I just think we have a lot of these stocks, which are consumer defensive stocks, that are set up like this. And they all seem to be getting ready to move together. Now, if we look at the weekly on this, it's kind of pointing down. That's a little concerning. I'd like to get some of these weeklies rotating up. Like when you have a nice pullback on a quality name like this on the weekly chart and you start to turn up, you got a lot of momentum and the game is much easier. When it's starting to turn down and you got all this weakness, it is not the best. So, you know what? I want to hold off on putting this on the watch list because of the weekly. Even though I circled it and I'm holding a little of it, I'm going to say let it prove itself a little bit better. All right? Let's let it prove itself a little bit better on that one. Starbucks. Started in a position in Starbucks last couple weeks. Same thing. Not a great performer. It's right on the trend line. It's oversold. Again, I want to pass on this. I want to pass, put it on. I don't think it's good enough to be on the watch list. All right, I want to pass on that. Kellogg. Again, another situation where we have a consumer defensive stock. This one's acting a little bit better. Now, remember, this one actually, if we take a look at the weekly. All right, let's take a look at that. Kellanova. So we have the monthly oversold and starting to rotate up. The weekly is kind of got that slow grind back up. And the daily here is kind of a little overbought here also. Now I had it on my list because I do think there is some good core consumer defensive stocks you could start to get in here, like the General Mills
Kellogg's and stuff like that, because they haven't moved. And being defensive in nature, if the market does pull back down or we get some kind of rotation, we might actually see these stocks perform. But again, can't justify it on the watch list because it is overbought. One of the things I like about our watch list, sometimes we'll put a setup that we like if we get down there. Like there's a lower trend line down here on Northrop Grumman. Aerospace defense stocks, at the time of war, we never know when something new is going to break out and how Taiwan and China is going to play out, and Russia and Ukraine and Israel and Gaza. I mean, there's a lot of conflicts going on, and anything new you would think is going to be kind of positive for aerospace defense stocks. But it's important to buy these on our setup. So again, even though I do have a lower trend line here, what I'll do is I'll set the alert for us. It's your alert pullback. That way, when you get the alert, I send it out. I get that sent to me if we get that pullback to the trend line here. Also going to be watching for a divergence on this. It doesn't set up as a divergence. It was a divergence back here. Nice little move. This is kind of choppy. We have this 1, 2, 3 channel. Really need to get something down here. I mean, even this trend line back here would be great if we actually ended up getting down to that level also. So we have a trend line underneath us. We have a trend line here. Some of these, we don't have to jump in right away. We have to wait for our spot, wait for our shot. All right. Now I do like the AVAV a lot here. Kind of a little down little move on Friday. And it recently had some news after earnings. It came down. I picked up a little of it. It's been bouncing here a bit, and now it kind of pulled back down. Nothing's really setting up here. Again, continue to watch that going forward. All right, so here we have one that I'm going to bring on the watch list. We haven't had this one on in a long time, and you can see I don't have too many circles. I don't follow this one too much. Actually, if it burns me at one point, then I said, hey, it's not acting right. There was a divergence here, and it kind of dropped off, popped a little, but then just a fast rotation. Whenever you get a bounce, and you're looking at that maybe possible divergence, and you get a bounce, but the rotation happens really fast, most likely, and the price is holding under the 20 or 50, most likely the trend is going to continue. All right. There was actually a nice divergence back here. See that higher low? And now we're in this first pullback. So whenever we have a downward trend that was broken, the channel has been broken to the, we kind of moved up, finally broke through it. The first pullback after a channel or a trend break kind of represents our next higher low. So if this gets oversold, we look at where the price is, and then we could start establishing maybe a higher low or a new trend that's going to start going up. And that seems almost to be in a perfect spot here. So we have an oversold level, have a slight divergence on the 9.3. You have the 200 period moving average. You have everything here lining up for us, even a trend line between 70 and 73. 73 to 70 is our buy zone. So even right now, right in this, we're in that buy zone. We're in that buy zone right now. We're oversold with slight divergence. It's fine. It looks good. It deserves to be on the list. Could be something I'm getting into next week to start the week off. Let's circle that one as one of our definitely candidates to get into early next week. Now I had another one that kind of fit the criteria. Is the AZO just getting oversold? You have a slight little trend line underneath this,
It's been rocking and rolling up above the 200. Hasn't really done much, but this is what I'm looking at here. I'm looking at the stochastics just starting to move back up, and possibly the price starting to move back up. AutoZone, and then I am in NE. Now Noble, again, that was off of our watch list a couple weeks ago. This was a Russell 200 December Russell liftoff, and I gave you a few stocks that I liked in the Russell. Noble was our best bet on this because, first of all, it was in the Russell, and we said the Russell was going to rally December and January, and this was the best looking HPS setup. We were oversold. We had a lower trend line of a 1-2-3 pattern, and we had a rising trend line. So you had 1, 2, 3, 4, 5 indicators lining up here. And what are the 5, you ask? Well, first, the stochastics are oversold. Second, we have a recognizable pattern here, and we have a lower trend line. Then we have a trend line underneath us. Then we have what's called the X marks the spot. So it's a lot of different things here. X marks the spot where 2 trend lines converge. And now, again, I can't force you to get in it right now, but if you're in it with me, and you should be, because this was a best bet, probably end up looking to take this off next week because of, it had a big move. All right, Hershey's. I've been really banging the table on this one over the last 2 weeks. And, we kind of had that. It's hard to see down here, but we got oversold, kind of a little gap down. Then we kind of had a little gap up here. You can see from this candle to this candle, it's a small little gap up, causing this to have kind of put in an island bottom here, where we have a kind of a gap down and a gap up, and kind of 2 candles just hanging down there. That's really, really bullish on the candlestick chart. The other thing is that we got back above that support line that broke down earlier, and we kind of flushed it out, and now we're back above it, back over the 20 for the first time in a long time. Not up to the 50, but this is still looking very strong. This, whenever your stochastics are heading up, and they're not above the 80 line yet, but they're in a very aggressive way up here, sometimes like in that 60, 70 area. Very, very strong. Again, another consumer defensive stock. The stock here has a long history. Hershey's is very interesting, and I would expect some insiders or activist investors to get involved in the stock this early this year, and I think this thing takes off. So I liked it here, 184, 186. I still like it, 186. Let's circle it again so you know, right here. This looks great. It does look good. Nice pullback. Momentum's on your side. Everything looks good on this. Everything. Hershey's, one of the best bets here. HSY. We'll circle that one with the SYY. That's a couple food stocks here starting to set up here. Well, one of my best bets for this year was Intel. Intel was one of my favorites from this year. Really started concentrating on it, and where was that? Here. In September, we went long off of the lower trend. Actually, it was probably long back here in June. It was one of our picks for the year, and that thing has been going up. And this is where we are right now, looking at 50.24. Love to get a pullback on that. Can't justify chasing at this point, but it's still one of my favorites. Intel, INTC. All right, here we have Target. Now, Target was, again, we bought this down at 110. We got the gap up, took profits, and I was saying, all right, I want to get in on any type of pullback to the 20. At that point, after we gapped up and I got out, I put this circle in
represented the 20 period or a pullback zone. Now it hasn't pulled back. You can see it's been kind of drifting here, drifting higher. So if we put that up here and we kind of rotate up here, we're getting closer to 20, but we're also going up a little higher. I still like the target here if we consider how far target came down. That was up, at 260-ish, and now it's 142. So, the slow grind back up. It's only up 12 points off of that gap up. So I would buy this on a pullback. I would definitely be jumping all over this on any type of pullback, and possibly just still liking it here and not worried about the pullback. I still think there's a lot more upside. So I want to circle it here, something I rarely do on an overbought level, meaning I like it here as a longer term trade. Not worried too much of a pullback, but if we did get a pullback, definitely would want to add to that. So Target does look good here. Target continues to look good. Other than Dollar General is another one that kind of got smacked down, but I'm not that big of a fan of the Dollar General. We liked it back here a little in November. We drifted back up. 139 was our gap resistance area. Whenever there's a gap down where that price starts on a gap down, we always watch for a retest of that. 9 times out of 10 a stock will move up to that level and pull back. Next time we get up to it, sometimes we could actually pop through it or pull back, but as you can see, it is a little bit better. Dollar General, Target, Walmart, WMT. Not bad, but a little overextended, but it looks like it's embedded. All right, let's also remember that I'm doing a bunch of scans here. A lot of these stocks, again, the oil and gas stocks actually are kind of set up as a short. I'm not a big fan of these CVX or ExxonMobil. They all seem to be starting to roll over. They didn't have much of a bounce. Not a fan on that. And a lot of these stocks with the markets at the highs can't be justified to get in here. Markets are at the highs. Of course, the Hershey's is probably one of my best bets for the week. I'm just kind of scanning through the last couple setups here. Cisco, slow grind back up. That's kind of that's an option here to get in that, to close that gap. Constellation Brands, same thing. Right underneath the 200 period moving average. That's been holding us back on multiple attempts to get through. Once, twice, multiple times here, 3 times, 4 times, 5 times, 6 times now. Whirlpool, not interested. Jacob Engineering, not. Hormel, Halliburton. Again, you can see the trend is down, starting to roll over. And even though these stocks, I'm doing some scans and stuff, very everything kind of extended here. With the markets at very close to all-time highs, a lot of these stocks are kind of out of our ballpark. Trying to bring in the last few couple here. I mean, that Hershey still looks good. All right, we come to the point here of taking a look at some of the big boys here, and I really like Apple going into this year with the new Vision Pro glasses coming out. So, and Apple is just kind of give us an oversold level just about. It's hard to believe it, but Apple is setting up pretty good. Any further pullback here on Apple definitely is worth getting into. I think it needs to get into probably even starting early this week. If we do get a gap down or move down here a little further, start picking it up. Do we get back down to the 200? Who knows? Not about predicting that, but I don't think so. I'll predict that. I don't think we do that unless there's some big news out there on Apple. I mean, they had recent news on their watch. Who knows if they're going to have a delay on their glasses? They might announce something like that. But Apple here, I mean, of all the stocks that we're waiting, this is one of the best stocks, and we're in almost one of the best situations here with the oversold stochastic. It's very hard to write that one up here. And then Meta, that's not showing that much
weakness. We did have the down day on Friday, but I tell you, Meta here came back strong, and still not at the highs. So Apple looking much better than Meta at this point. And then Google, G-O-O-G-L, go with the Google L shares. Again, you can see if really all right, look at that. You have Google here, pretty decent. We broke down through the trend, got back up, still fighting with it. The first pullback here looks pretty good. I have always liked Google. I think it's a good core position. It's actually a little extended here, starting to rotate over, but the base here is pretty nice. So we might actually stay embedded up here. The pullback to the 20 and the kind of support level here, that recent breakout, and we're coming back retesting at 139. All right. So we got to keep that on our list. Always want to keep Google on the list here for opportunities. Predictions on the overall markets, SPX. I mean, we're looking for high, for new highs, all-time highs. In January, I was looking for around the January 4th to actually take out those highs, give or take 2 days. So we're on schedule. We'll see what happened. We did have a down day on Friday, but you know what? Those down days come. One down day every couple of weeks is nothing really to worry about. We'll see what happens with this. It's hard to gauge. There's no divergence. There's no buy signals. There's nothing here that the big macro move to tell you, hey, this is the time to get in. And we are extended here. It's really two sides of the story. Do you believe the market's going to pull back and move higher, or the highs are in, or do you think that we're going to just continue to rally? Now let's put in this. Let's understand this on the monthly chart. This area that we're coming into right now is a major breakout area. I mean, every time we get through those levels, we tend to rally. If we have a large high and then we eventually get back to it, like we did back here in 2000 to 2009, 2010, we got through it. We kind of rallied up here for the next 4 or 5 years. I mean, that's years. Oh, that's incredible how that's years. So again, we're at the situation where we have a low. We're coming. Well, actually, let's go out here. I gotta move this over. Here we go. See that? Now, if we break through this, I mean, do we have a couple good months of rallying? I mean, most people are going to say no. From what I'm hearing, everyone's on board with a February pullback. Now, the January effect is coming in for January. That's going to be something we're going to be focused on. The small caps continue to move. The first 2 days of the new year are typically very bullish. The first day of the new year trading is very, very bullish. So that's going to be Tuesday. And then we'll see if we can actually take out the highs. And if we do take out those highs, how far do we go? Do we start to rally like we just showed you on some of these charts? I mean, big breakouts, retest of the highs. Once we get through them, we rally. Breakout, retest, rally. Breakout, retest, rally. Pull back, breakout, possibly rally. I like it. It's also an election year. We'll see if that plays any big part in this. And again, the Santa Claus indicator, if Santa Claus comes to the Broaden Wall or doesn't come, and if he does come, different things play out. We'll see what happens on Tuesday if we have that nice pop in the markets, the first trading day of the year, and then we get some follow through, and we'll see how that ends up being. But I think we're in good shape here. We're in good shape. So I'm bullish until there's a reason not to be. We don't take those big make those predictions as much. I don't see anything here. There's always a catalyst that could surprise us. A black swan event could surprise us, and we'll have to deal with it when it happens. Right now, I think the breakout is going to be positive, and we're gonna try to ride it as much as we can while we trade the intraday stuff, and then look for opportunities in the quality names. But right now, best bets going into next week: SYY, Hershey's, SHY, SYY. SYY. That looks really good too. SYY, HSY, Apple, AAPL. And we're looking to take NE off. And we'll just keep you updated on anything new that just lines up. There's a couple other ones here I was going to mark out. UNH, Racer brought that one to the table. I like the lower trend line underneath it. If we could get down there, again, this would be a great divergence. You don't have to worry about it. We have a divergence. You're going to get it. You're going to get the alerts. That's what I do. So if you like this watch list, you want to subscribe to it and get it delivered every week to you for the upcoming week. Individual stocks. This is more of a broad-based outlook for some stocks going into this year. A little pullback and a little, Happy New Year wish to you. But every week we do put out a new focus list, and every week we have new setups. We also, again, futures. We'll probably put out a futures video for those out there who are trading the prop accounts with us. You have a couple days with the 75% coupon on the Bullinox. The code is DTRDEC. DTRDEC. If you need any help, assistance, or you want to take advantage of the sale here at Day Trading Radio, we have a lifetime sale that expires on the 5th of January. Typically, our price is $16.99 for lifetime. That's everything included: our bots, our scripts, our codes, everything. It's a tremendous value. It's on sale for $7.50 until January 5th. You have to email me at ironaction@yahoo.com or head over to daytradingradio.com and just send in a support ticket if you want a coupon for that. I'll make you up one and you could get it, but you have to reach out to me before the 5th. We got a lot of things changing going into next year. Have a happy New Year, everyone. I'll see you guys Tuesday morning, and that's it. DayTraderRockStar signing off. Happy New Year.